But one of the provisions of the strategic metal designation is that, like the critical mineral list, is that they can limit or curtail exports. That would be silver and platinum in terms of the precious metals. But yeah, absolutely they can, and I think that does happen a lot. And there is a contract on COMEX as well that is in Hong Kong. I believe it's a Brinks facility in Hong Kong. And there is something called exchange for physical, where these players could buy a contract in the West to exchange for physical in Hong Kong and take possession there, have it driven to the Shanghai Metals Exchange by armored cars. So yeah, absolutely, there could be. Now we don't know how much of that is, and I would think if it was a constant delivery drain down, you would start to see things happening that would seem out of the ordinary, much like we continue to see on COMEX these days. But yeah, the answer is yes. And I don't know what safeguards are there if it started to get out of control, but my guess is this administration might have a problem with it, at least is my opinion. We are seeing those same levels, as a matter of fact. Let me see if I have the March numbers. The Bear with me one second. But the short answer, before I find the actual numbers, is yes, we absolutely are seeing the exact same thing. The numbers are increasing, unabated, as a matter of fact. So let's see here. In first day notice for April deliveries showed that 10,138 gold contracts stood for delivery. That's 1,013,800 ounces of gold, and 1,181 silver contracts. That's 5,905,000 ounces of silver were posted for delivery. And, if we look back at the March numbers, Adam, we see there were 14,559 gold contracts delivered, which obviously a lot of gold, 1,455,900 ounces, and 9,212 silver contracts, 46,060,000 ounces. Um, you know, this is the question that, in my mind, has been missed completely and totally by the mainstream. These are not trivial numbers. You're in the billions and billions and billions of dollars every single month. A lot of it leaving COMEX. A week ago, Friday, I believe we saw 2 million ounces leave the eligible category. Those aren't even for sale. Those aren't even bars that are posted. That would be like someone taking 2 million ounces out of our storage program in 1,000 ounce bars, which is an eligible category, Brinks JFK, New York, and taking physical possession of them. So, how much does 2 million ounces weigh? I mean, I'll ballpark it for you. You're looking at, geez, uh, ballpark.
What if I told you the real gold and silver market isn't what you see on the screen? Behind the scenes, billions of dollars in physical metal are quietly leaving Western vaults, and most investors have no idea it's happening. According to Andy Schectman, this could be the early warning signs of a much bigger shift, one that could shake the entire financial system.
Uh, about 168,000 pounds. So, when you realize that in February we talked about almost 39 million ounces leaving the COMEX, getting on trucks and going, that's over 2 million pounds. So, yeah, it's continuing unabated. You look at what happened for not just here too, because you look at what happened in February after the price of silver literally got its teeth knocked in. China recorded its largest single monthly inflow of silver ever in recorded history. January and February combined were off the charts. February was the biggest single month ever. Now, this is from the second largest producer of silver in the world, who's been flying all around Latin America for the last couple of years, buying doré and concentrate from Mexico and Peru, number one and three. So the number two producer in the world buys doré and concentrate at double what the West will pay from one and three, and then is importing more silver than ever in recorded history after the price got destroyed. Price is a tool of misdirection, is the moral of the story. The price will throw you off the trail. The price will throw the media and the talking heads off the trail. And the financial advisors, you're crazy, Mr. Jones. Why would you ever buy that stuff? Look at how poorly it's performed in this atmosphere. But then the money over there says, shh, and they're scooping it up like this while everyone else is being misdirected by price. That is the kind of stuff that to me is all you really need to know. If you have the ability to separate reality from emotion and say, yeah, really? If price was that big of a hindrance, then why do we see entities across the globe doing what they're doing to accumulate it? And for going on 18 months here in the United States, billions every single month. Doesn't all leave COMEX, but a lot is. And to me, that's really all you need to know about where this is ultimately going. And but one of the provisions of the strategic metal designation is that, like the critical mineral list, is that they can limit or curtail exports. That would be silver and platinum in terms of the precious metals. But yeah, absolutely they can, and I think that does happen a lot. And there is a contract on COMEX as well that is in Hong Kong. I believe it's a Brinks facility in Hong Kong. And there is something called exchange for physical, where these players could buy a contract in the West to exchange for physical in Hong Kong and take possession there, have it driven to the Shanghai Metals Exchange by armored cars. So yeah, absolutely, there could be. Now we don't know how much of that is, and I would think if it was a constant delivery drain down, you would start to see things happening that would seem out of the ordinary, much like we continue to see on COMEX these days. But yeah, the answer is yes. And I don't know what safeguards are there if it started to get out of control, but my guess is this administration might have a problem with it, at least is my opinion. If numbers could speak, if arithmetic could speak, then yes. I mean, you're not really, I'm not talking to the guys at Goldman Sachs and JP Morgan about this, but I can certainly tell you that when you look at the open interest, that being the number of contracts every single month versus the amount of deliverable metal, yeah, it's, what could possibly go wrong territory. You're seeing that here. You're seeing that in London. The amount of contracts that have been issued against the amount of metal that could be delivered is ridiculously out of whack. And so, in that respect, yes. What is different, Adam, is that no one has ever experienced delivery like this. This is an anomaly in every sense of the word, where most contracts, my entire career, 99% or better, never stood for delivery. That is changing. And that's why you've never really, I think, had to deal with something like this. No one ever had the incentive to do this. No one would challenge the West or our markets. The Achilles heel of this entire system, there are two. One is that it can be delivered, where contracts typically were used to offset risk for producers and farmers and miners and manufacturers and companies like mine. You offset the risk with your inventory. So if the price drops, your inventory doesn't drag you underwater. But now that little Achilles heel that says, well, you can take delivery if you want, is now being exploited. And the second one is that they can exploit the paper price, sell paper in the United States, which is the only market that settles price or creates or defines price, and then buy it elsewhere around the world with less fanfare, with less public acknowledgement, with less media attention. So yeah, there's no question about that. And conventional wisdom says, well, they always get open interest down into the delivery month. It's always happened before. Oh, okay, so why do you need insurance? Your house is never burnt down. It's like we're getting to that point now. The only other thing is the CME group is really a bunch of big players, very big players that you would think would protect their own before that happened. But, I don't know, could four glitches since Thanksgiving have anything to do with trying to offset this arithmetic where twice on the upside there's a glitch or an overheating, and then twice on the downside it's ironic that the circuit breakers glitched. So yes, these are all of these things taken together are worth more cumulatively in my mind, Adam, than they are in and of themselves, because it's a pattern of nonsense. One of these days, that nonsense will catch up with, I think, the trustworthiness of an institution that goes to these kind of lengths um, to destroy price discovery. It's happening, and little by little by little, then when's that coming? I'm not sure.
Right now, something unusual is happening inside the COMEX. Massive amounts of physical gold and silver are being demanded for delivery. Not just traded on paper, but actually taken out of the system. We're talking about millions of ounces every month, billions of dollars leaving vaults. And here's where it gets even more interesting. There's a mechanism called exchange for physical, where large players can buy contracts in the West and take delivery in places like Hong Kong, often through facilities like Brinks, then move that metal straight into Asia. A lot of it ends up flowing toward the Shanghai Metals Exchange. Now ask yourself why? Because while Western investors are distracted by falling prices, countries like China are buying more than ever. In fact, after silver prices dropped, China recorded its largest silver imports in history. Let that sink in. Price is falling, but demand is exploding. That tells you one thing. Price is being used as a tool of misdirection. Meanwhile, the system itself is showing cracks. On one side, you have a massive number of paper contracts. On the other, a much smaller amount of actual metal available for delivery. For decades, almost no one asked for delivery. Everything was settled in cash. But now, that's changing. More players want the real thing. And that exposes a dangerous imbalance. Too many claims, not enough physical supply. It's like a bank where everyone suddenly shows up to withdraw their money at once. If that happens here, whether in metals or banks, the system gets stressed fast. And that's why more institutions are moving toward physical ownership. Because when you hold the real asset, you eliminate counterparty risk. No middleman. No broken promises. History has shown how quickly this can escalate. Back in the 2008 financial crisis, prices crashed, but physical metals completely disappeared. Mints shut down. Supply chains froze. You simply couldn't get gold or silver. And today, the warning signs are even bigger. If this trend continues, countries could start restricting exports, hoarding supply, and competing for future production. And when that happens, this doesn't move slowly. It moves all at once.
That is exactly what it is. It's also ironically happening in similar scale at the exact same time in the private credit market, where again, it all boils down to trust, lack of trust, trust of our institutions, trust of our markets, trust of our political structure, trust of everything. And yes, that is exactly what is happening. That's why people tell you there is no really there's having physical possession. It eliminates the counterparty risk that is growingly pervasive in everything these days in markets where you know old rules don't really apply as much as they were. And all of these things, whether it be a run on COMEX or a run on the banks, are reminiscent of one thing, a Ponzi scheme. A Ponzi scheme where you issue more paper than there are um, bars
Right.
or
More
shares
more
of a
more claims
certificate.
than actual
Yes,
collateral.
yes,
Yeah.
and that's exactly what it is across the board. Or you leverage yourself too much in private equity and sell it based upon liquidity that when everyone comes at once, it doesn't matter what market you're talking about. If it's over leveraged or over or rehypothecated, when everyone comes at once, you have a problem. Well, that's why they say there's no bull market like a precious metals bull market, because in equity markets, you make all this money and you take a bunch off the top and you go back into dollars and think about what you want to buy with your profit or buy more stock. In a metals bull market, it is one that is predicated on concern and fear. And the higher the price goes or the crazier the world gets, only motivates you that much more to trust and believe your intuition that led you that way to begin with. You're not selling it and going back into dollars in this system. It's one of these things that can happen relatively quickly. I think the first thing that you would see in that environment in relation to this industry would be, a lot of backlash in countries like Australia, South Africa, um, Great Britain. Why the hell are we, especially probably Great Britain these days, why the hell are we sending the US our stuff? Why would we send them our stuff
Hmm.
um, when we can keep it here at home? Why would we ship it across the globe? I think you'd see sovereign mints stop shipping into the United States probably pretty quickly. There would be no reason or incentive to do so. And yeah, I think it would be because at that point, you start to see a rush to buy it, and then you buy future production. You're buying everything you can, and the big money certainly would lead that charge. And this is an industry that I've seen, look, there's never been anything like we've seen in the last 5 years in this industry. I remember many, many years, though, where there had been disruptions within this industry in the 36 years I've been doing this that were, little microclimate instances along the way where bang, just like that, something happens and everything is gone. Like in 2008. In 2008, everything's normal, 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 normal. And then bang, the price of silver goes from 21 to 9 and gold goes from 1,000 or 12,000 to 700, I think. And this is, you would think in that environment when silver just fell by 60% and gold by 30% in a matter of days, that there's no demand at all, that everyone is dumping supply as fast as they can get onto the market, but couldn't be further from the truth. The US Mint in '08 was shut down about 6 or 7 or 8 times. I don't think they've hardly made a platinum eagle since that day, but literally shut down the majority of the year. The Rand Mint in South Africa that year, for the first time ever, someone bought them out. One wealthy Swiss businessman, was the rumor, flew a 747 to South Africa, bought everything they had. The Perth Mint in Australia took no new business after July that year for the year. And the Austrian and the Canadian Mint were working 24 hours a day, 3 8-hour shifts, and were 4 months back ordered. You could find nothing. There wasn't a distributor in the industry. There wasn't anyone. The only metal that was available for 4 months was from David Morgan. He called me up and he said to me, Andy, I've known these guys in Washington for a long time. They're in the medical device business. They own a company called Pyromet. They'd like to throw their hat in the ring since there's nothing to get. Nothing, anywhere. Not anyone had anything. No distributors, no refiners, no nothing. And I said, sure, let's do it. They made the ugliest 100-ounce bars you have ever seen in your life. They didn't even say AG. They just said 100 ounces. But yet that's all that we had to sell. And he hooked up a lot of companies like mine that sold those for 2 or 3 months until things came back online. The moral of the story is that this came out of nowhere in a period of time where there was nowhere near the demand that there is today. So yes, I think if it starts up top, and you're seeing it happen up there already, but people just think that the recency and normalcy bias, yeah, it always gets taken care of until it doesn't. And then when it doesn't, just like that, everything changes. And I think that's the lesson to be learned.
So the real question is, are we watching the early stages of a global shift in the metals market, or the beginning of something much bigger, a loss of trust in the system itself? Because when that trust breaks, everything changes overnight. If you want to stay ahead of these trends and understand what's really happening behind the scenes, make sure to subscribe. Because in times like these, information isn't just power, it's protection.